Chief Investment Officer with Probis Securities, joins us now. Jonathan, good morning. Thank you for joining us. Up, down, down, up. I'm talking about crude. Where is it headed?
Look, I think that's very interesting questions. And I think with the volatility we're seeing at the moment, it's a little bit tough. I think the market is flowing, ebbing and flowing, I guess, towards the news that we hear, particularly out of Europe or particularly out of Germany at the moment, basically saying that Germany is considering banning some of the oil from Russia. Obviously, that's a real headline story if that is coming to fruition, or they look to do something. We are hearing that there are more talks also happening between, obviously Saudi Arabia in terms of increasing its capacity if that were the case. So certainly a lot of volatility and actually heading to the top side. And let's see whether or not any of that news is actually something we can count on or not count on.
So, Jonathan, let's look at the scenario number one. Scenario number one is that the war prolongs. If the war prolongs, it's going to cost. It will come at the cost of growth. If it will come at the cost of growth, when will the realization come in that low growth is also bad news for crude consumption?
Look, I think that's a thought, and that's hopefully slow growth, interest rates moving up, tightening monetary policy, all those sorts of factors will affecting growth. I think that when we look at the geopolitical events in Russia and the Ukraine are, I guess, in one area, so it's really not going to affect too much the rest of the world, affected the fact that we have high import prices, and that might slow down. But when you look at it, you've got these high costs of commodities going through all the economies. At some stage, it's got to give way. And at some stage, you've got to start to see the economies are going to sort of start to come back. But we've also still got that the cheapness in the money. Although we know things are changing, we know interest rates are moving up, they're not moving up, or the situation doesn't want them moving up fast. So this is a gradual process. So I think the market is basically saying, well, look, it is a gradual process. We know Russia and Ukraine hopefully will come to a resolution at some point. But if it doesn't and it drags on, then the market will start to think they'll need more drastic measures in order to try and resolve that issue. And that might have a fallout to commodities. So I guess it's a lot of talk. There's a lot of action that needs to be done to see how the global economies perform and to see whether or not the increase in commodity price we're seeing will actually slow the global economic growth.
Jonathan Barratt, good morning from India. We've talked about commodities, we've talked about crude in particular. The bond market, so after Jerome Powell's comments that came in, we did see the US 10-year yield hit 2.29%. How should one look at that?
Well, it's actually, when you look at where the bonds are trading, when you also look at where the equities are trading as well, you start to think, well, are we going to see a bit more of a correction in where the market should be? There's too much risk out in the market. Look, I think everyone at the beginning of the year thought that that we would have an inflationary environment. We are seeing inflation pick up a lot more. I am concerned that we do let this genie out, and in the case of that, trying to rope it in, how much QT will we actually need to try and rope in this inflation? And I think when we see that, will we actually then start to see asset prices correct and or economies start to slow down? At the moment, I think the markets, the jury's still out as to what will happen. But I think we do understand that whilst we have input prices high, that should slow the economy, but we've still got an inflationary effect that we've got to try and work out.
Okay, so just taking forward that point, the inversion of the bond yields also that we had seen last week, gold prices that are going up. I was just trying to get a macro picture, which is what we've been trying to do with you as far as flows go, because India had first been underperforming, then it was outperforming the rest of the world as well.
Look, I think we all get a better handle on that. It'd be great. Look, I think there's too many factors out there that are really sort of making the market undecided. I mean, we just have to look at what's happening, particularly for the gold market, where we've seen a dramatic rise and then all of a sudden under pressure. But now we're coming close to sort of a more of an upward move for gold as people start to try and mark in those inflationary expectations again. So I think it's very hard. I think it's the volatility certainly there, but I do think that we still haven't seen enough of that inflation, and I do think that people will start to move back into that gold and those precious metals. Of those, obviously, I still like gold, but I think silver is the better one. But I think the flows, there's a lot of money still on the sideline. And that to me is the concern, because it hasn't been parked into assets. And is there enough liquidity to be able to park the money that's needed to be invested? And that to me is one of the issues that I think many people are facing, because if they don't know where it's going, it's just going to create imbalance in asset prices.